So you have got $100 in your trading account, not $10,000, not even $1,000. Just a humble Benjamin Franklin sitting there, ready to be transformed into a financial empire. Your dream to turn it into millions, buy a mansion on a private island. But reality check, that $100 isn't a golden ticket unless you treat it like one. And no, you don't need a magic indicators, a secret Wall Street handshake, or your uncle's dodgy WhatsApp trading group. What you need is a blueprint, one that works. In this video, I am going to give you exactly that. So buckle up, grab a notebook or maybe a cookie because we are about to turn your small account into a smart account. So our step one is risk management. Okay, let's get the boring but life-saving stuff out of the way first. Risk management. Yes, I know you are not here for lectures. You want to make money. But imagine this. You are on a tightrope crossing from $100 to $1 million. Would you sprint across with your eyes closed, juggling flaming torches? Because that's what you are doing when you risk 50% of your account on one trade. Let me give you a story. Once upon a time, I risked 30% of my account on a trade I found from a Discord group called Moonshot69. It didn't moon, it crashed hard. My $100 became $40 in the time it takes to microwave popcorn. Now imagine doing that 4 times in a row. Your account gone, your dreams gone, your mental stability also gone. This is why professional traders, yes, the people who do this for living, follow the 2% rule. That means only risk 2% of your capital on each trade. With a $100 account, that's just $2 per trade. And yeah, I get it. You are thinking $2 per trade. Bro, that won't even buy me a chocolate. True, but here's what it will buy you. Survival. Survive, learn, grow, profit. Risking 20% might feel exciting, but so does skydiving without a parachute once. Think of your trading account as a video game character. Every dollar is 1 health point. When you recklessly charge into battle with no strategy, you die. But if you protect your health point, use stop losses and upgrade wisely like backtesting, you will make it to the profit city. Our next step is compounding, the snowball effect. Let's say you are earning 1% per week. Now, I know what you are thinking. 1%, that's nothing. I spend more than that tipping that Swiggy guy. But 1% a week compounded is a 67% return in a year. Make that 2%, you double your money in less than a year. Let me explain with a story. Back in college, I used to save coins in a jar labeled Pizza Fund. First week 10, second week 15. By month 3, I had over 300 rupees. Enough for a full cheese burst and garlic bread combo. All because I didn't touch it and kept adding. That's compounding. Now imagine that rupees 300 was $30 million and that garlic bread, well, it's your ticket to financial freedom. Each tiny profit adds to your base. Each win makes the next win bigger. That's the snowball. Just keep rolling it down the hill and don't melt it with your dumb trades. So our next step is to find your edge. Now let's talk about strategy. You need something that gives you real statistical edge. And no buying random coins because Twitter says it's about to pump is not an edge. Let me give you a new example. Imagine being a chef. You can't cook all cuisines at once. You need a specialty. Thai, Italian, North Indian. Your edge in trading is the strategy that suits your skills and mindset. If you are fast and love quick actions, try scalping. Prefer calm, slow trades, maybe swing trading is for you. But whatever you do, test it. Backtest it like your life depends on it. Because in a way, your account does. If you wouldn't use a parachute without checking for holes, don't trade without checking your strategy. Backtest, note win rate, track drawdowns, find flaws, fix, repeat and improve. So our next step is journal your trades. Now let's talk about the secret sauce that separates amateurs from pros. Journaling. Not dear diary, the market hurt me today, but a real trade logic that tracks your entry and exit, trade reasons, outcome, emotions. Yes, emotions. I noticed I kept losing money every Monday morning. Turns out I was making revenge trade after bad weekends. Journaling revealed it. Now I don't trade Monday morning unless I have had 8 hours of sleep and a proper breakfast. Your trading journal is your personal mirror. It reflects your patterns, your weakness, and your superpowers. So journal each and every trade, whether it's win or loss. So our next step is know yourself. Here's a step that no one talks about, but it's critical. Know your personality. Some people love chores. They are natural day traders. Others love patterns and plans. They thrive in swing trades. If you are an overthinker, avoid 1-minute charts. If you are impatient, maybe long-term investing isn't for you. Trying to copy someone else's strategy without matching it to your mindset is like using bodybuilder's diet while training for a chess tournament. It won't work and you will be hungry and confused. This journey isn't glamorous in the beginning. There will be losses, your account will flash red. You will question your life decisions. Your mom will say, stop gambling. And your friends will ask, bro, you still doing that stock thing? But if you stick to the blueprint, risk small, compound smart, test like a scientist, journal like Sherlock, trade like you, not someone else, then one day that $100 could be your first step toward full-time trading or financial freedom. So if you got value from this video, smash that like button like you are slamming your first green candle of the day. Subscribe for more real talk trading videos and leave a comment. What was your worst trade ever? Let's cry together in the comment section. Until next time, stay smart, stay patient, and may your losses be small and your gains be ridiculously satisfying.